Hello and welcome to the look ahead for Wednesday, the 21st of August with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow we've got UK public sector net borrowing figures. We've also got the minutes from the latest FOMC meeting, as well as the EIA oil inventory data. So let's just focus on those minutes from the FOMC. It comes from the meeting where the Federal Reserve left interest rates unchanged. However, the market will be looking for signs that the Fed is looking to start cutting interest rates in September. At that meeting, the Fed acknowledged that progress was being made on inflation, cooling inflation back towards the Fed's 2% target. Now, inflation data has come out since then. We saw inflation cool to a 3-year low. It's down at 2.9%. Also, we've had speakers, Federal Reserve speakers, who have sounded a little bit more dovish in recent commentary and suggested that September could be a good time to start discussing interest rate cuts. Now, the market's currently fully pricing in a 25 basis point rate cut, and is seeing a 25% probability of a 50 basis point rate cut. Now, I've got gold's chart up here. Gold, which is non-yielding and USD denominated, has really benefited from these expectations that the Federal Reserve is going to potentially start cutting interest rates in September. We've seen gold rise to a fresh all-time high today of $2,531 an ounce. Has actually just come away from that all-time high and down to around the $2,504 as we speak. But as I said, as expectations have risen that the Fed is going to start reducing interest rates, that's weighed on the dollar, which has also supported the dollar-denominated gold. So as far as what we're looking at technically here, gold is trading within it's broken out of the rising channel in order to rise to that all-time high. As far as the upside is concerned, buyers will look to, if we get sort of dovish commentary in those FOMC minutes, and also dovish commentary from Federal Reserve Chair Jerome Powell when he speaks on Friday at the Jackson Hole Symposium, then we could see gold push to fresh highs again. A rise above the 22,530. It's going to bring this level in here, which is around the 2,575, which is the rising trend line resistance dating back to 2022. As far as support is concerned, support is just being tested at the moment around that rising trend line, the upper band of that rising channel. Below here, watch out for 2480. That's the high that we saw at the beginning of August and also in July. And then a breakdown there could open the door to the May high, which is at 2,450. So another market that we'll be watching tomorrow is USD Japanese yen. Obviously, this could benefit from further US dollar weakness. US dollar is trading at a 7-month low against its major peers, and that's been beneficial to the Japanese yen. So not only are we seeing the carry trade really unwind, that's what's been going on. We saw this massive fall off in the yen over the past few weeks. Basically, as the Federal Reserve is looking to cut interest rates, the Bank of Japan has turned more hawkish and actually increased interest rates as well. So we've seen this real strength in the yen. It found support there on the 5th of August, down at the 141.70 levels, recovered. It's found resistance here, this level here, 149.40. So not only is that the 38.2% fib level of the high from the 162 almost to the 141.70 swing low, but it's also this rising trend line resistance that dates back to the beginning of 2023. So we've seen the price then has rebounded lower. We're just sort of testing, we've broken through this level here actually on further US dollar weakness. That's around the 146.50 level. Next time we're watching out the downside is going to be that 145 round number. If we break through there, then we might be looking back towards that 141, 142 level that we saw on the 5th of August. as far as upside is concerned, that's going to be the key level there. The 149.40, 150 level. That's where buyers are going to need to break above in order to get towards this 152 level, which will be seen as a relatively strong resistance as well. So lastly, let's just take a quick look at oil prices, as we're going to see these oil inventories come in. Now, oil has also fallen off really quite sharply over recent sessions. And that's basically as we've seen a couple of things come into play here. We've seen the increased likelihood of a ceasefire or progress towards a ceasefire in Gaza, and US Secretary of State Antony Blinken is in Gaza at the moment and was helping to broker a deal, which appears to be making progress. And that means that the risk premium is evaporating off oil, which has been selling the price lower. At the same time, we've got concerns over the demand outlook in China, which has added into the weakness in oil prices. Now, the oil price ran into resistance just above the $80 round number, so on the 100 SMA there, and that was also the high. On the 12th of August, it's rebounded lower. It's actually found support here, just at this level as we would have expected it to, which is the June low around the 72.80 level. That's where it found support. It's edged higher. I mean, this does look like if it can break below this level here, the 72.80, which is the June low, then it's going to bring this level here into play, which is the 71.70, which is the August low. Below that, then I'd be looking at $70, and also this level here, which is the 2024 low, which is the bear with me, so basically the 70 level. It's just below there. It's 69.28. So that's the levels to be watching on the downside. If we find that this support holds, then on the upside, watching out for 76.90. That's the level. It's offered resistance on several occasions. And above that, we've also got the 200 SMA at 70.15. Sorry, 78.15. So I hope you like what you've been seeing, and if you do, then please do give this video a like. And if you'd like to receive more videos like this, then please do subscribe.